What is going on, everyone, and welcome back to Qualcomm Pulse. Kicking things off with a massive story in the world of artificial intelligence. Big tech giants like Microsoft, Alphabet, and Meta platforms are making unprecedented investments in AI infrastructure, fueling incredible growth for companies like Broadcom. We're talking custom-designed microchips, and Macquarie analyst Arthur Lai has initiated coverage on Broadcom with an outperform rating, seeing their specialized chips surpassing even Nvidia's GPUs in the AI race. This is huge. And speaking of the AI surge, chip makers are absolutely on fire. We're seeing a record-breaking rally, with the Philadelphia Semiconductor Index climbing higher and higher, outpacing even the Nasdaq 100. Heavyweights like ON Semiconductor, Intel, Nvidia, and Broadcom are all part of this incredible momentum. We'll break down what's driving this rally and why it's showing no signs of stopping. But with all this rapid AI development comes a new set of challenges. How do engineers ensure they're not caught flat-footed by legal and compliance risks? We're diving into 7 essential tips for engineers to collaborate effectively with legal teams, ensuring that the fast-paced world of AI development is also smart and safe. This is crucial for building trust and avoiding pitfalls. And finally, for all you savvy investors out there, we're looking at 4 must-own dividend growth stocks that are top holdings for some of the best fund managers around. We'll reveal which companies, including Microsoft and Apple, are favored for their consistent dividend growth. Stick around for all these stories and more. Make sure you're subscribed and the bell is on. Broadcom's AI chip dominance heats up. Big Tech's insatiable appetite for artificial intelligence is driving unprecedented investment, and Broadcom is at the center of it all. Giants like Microsoft, Alphabet, and Meta platforms are pouring billions into AI infrastructure, creating a massive boom for semiconductor providers. Macquarie analyst Arthur Lai has thrown his support behind Broadcom, initiating coverage with an outperform rating and a $420 price target. Lai believes Broadcom's custom-designed application-specific integrated circuits, or ASICs, are poised to overtake the graphics processing unit market, currently led by Nvidia, especially as hyperscalers and vertical AI markets increasingly adopt these specialized chips. This strategic focus on custom silicon is giving Broadcom a significant market advantage. Broadcom isn't just anticipating growth, it's delivering. The company recently reported third-quarter revenue of $15.95 billion, a 22% jump year-over-year, beating analyst expectations. Their AI revenue alone surged by an impressive 63% to $5.2 billion, and they're projecting even higher AI sales of $6.2 billion for the fourth quarter. Adding to the excitement, Broadcom has confirmed a substantial $10 billion custom AI chip order from OpenAI, a deal that underscores the immense demand for their cutting-edge technology and helps alleviate processor shortages. This surge in AI demand, coupled with strong corporate earnings and cloud contracts, has propelled Broadcom's stock up over 57% year-to-date, significantly outperforming the Nasdaq 100. The company's strong performance and strategic partnerships, including those with Oracle and Microsoft, highlight its pivotal role in the AI revolution. Investors and industry watchers are buzzing about Broadcom's strategic positioning. Analysts point to the company's specialized chip market moat as a key differentiator. The recent $10 billion order from OpenAI has been a major catalyst, signaling strong confidence in Broadcom's ability to meet the complex demands of AI development. This news has solidified Broadcom's status as a leader in the rapidly expanding AI hardware landscape. Don't go anywhere. The semiconductor rally is just getting started. Next up, we're diving deep into the record-breaking surge across the entire chip-making industry. Chipmakers surge on record AI demand. Get ready for a tech takeover. Chipmakers are currently riding an unprecedented wave of success, with the Philadelphia Semiconductor Index achieving its longest winning streak in nearly 8 years. This benchmark index has climbed a remarkable 8.7% over the last 9 sessions alone, and its year-to-date gains now stand at a staggering 22%, significantly outperforming the Nasdaq 100's advance. This rally is a clear indicator of the massive momentum driven by the artificial intelligence revolution. The driving force behind the surge includes industry titans like Semiconductor, Intel, Nvidia, and Broadcom. Nvidia continues to see its shares soar, up over 32% this year, fueled by relentless demand for its data center chips and memory products, directly benefiting from big tech's aggressive AI investments. Semiconductor is also capturing investor attention, with Needham analyst Quinn Bolton noting early signs of recovery in its industrial segment, despite facing some margin pressures. Intel's stock has jumped more than 24% in 2025, boosted by reports of a significant stake acquired through the CHIPS Act and a strategic restructuring under CEO Lip-Bu Tan. And Broadcom, a standout performer, has seen its shares climb over 55% year-to-date, bolstered by its pivotal partnership with OpenAI and impressive quarterly results, including a confirmed $10 billion order for custom AI chips. This widespread rally underscores AI infrastructure as the dominant theme of 2025. Data reveals that Nvidia, Broadcom, Taiwan Semiconductor, and Micron collectively account for nearly 70% of the index's gains this year. Analysts attribute this sector's strength to surging AI-driven demand, with major deals like Oracle's and Microsoft's fueling optimism about long-term growth. The ability of companies to secure chip supply in advance for AI workloads suggests this rally could be highly sustainable, even as valuations appear stretched. The sector's central role in powering the next era of technological expansion is undeniable. But what happens when fast-paced innovation meets complex legal frameworks? Get ready for essential tips for engineers navigating the legalities of AI. AI engineers master the legal landscape. In the rapidly evolving world of artificial intelligence, engineers face a critical challenge: how to innovate rapidly without stumbling into legal and compliance landmines. The key, as highlighted by industry insights, is a move smart and then fast approach, integrating legal and information security sign-offs from the outset of every AI project. This proactive strategy is essential for building trust and mitigating risks associated with data usage, contracts, and brand reputation. Collaboration with legal teams is paramount. Engineers are advised to involve legal counsel early, not necessarily with all the answers, but to provide visibility into the gray areas of AI development, data sources, decision-making processes, and potential shifts in model behavior. Maintaining a simple log of AI project decisions is crucial for future audits and inquiries, providing a solid record when questions arise. Furthermore, legal teams need to understand the AI systems they are defending, requiring engineers to have a deep knowledge of their AI supply chain, including third-party services and their potential back-end model changes. This ensures end-to-end auditability and prevents unintended data redirection. Awareness of contractual terms is also vital. Engineers must understand that accepting terms for AI services on behalf of a company can carry significant legal weight, potentially violating regulatory restrictions or exposing sensitive customer data. Building a culture of legal awareness among employees, coupled with safe experimentation zones and clear oversight of tools and data usage, is key. Engineers must also be prepared to translate technical complexities, like model drift, ownership rights, and data safeguarding, into simple English for legal teams, enabling them to draft more robust contracts. Ultimately, designing AI systems with auditability in mind, especially when chaining AI agents, is crucial for proving identity and access controls are enforced. The emphasis is on making smart, careful progress to drive the best business outcomes safely. Now, let's shift gears from innovation strategy to investment strategy. Discover the dividend stocks that top fund managers are betting on. Top dividend growth stocks revealed. For investors seeking consistent returns and long-term growth, peering into the portfolios of top fund managers can offer invaluable insights. Today, we're highlighting 4 dividend growth stocks that are not only heavily weighted in 2 of the most respected dividend growth funds, Vanguard Dividend Growth and T. Rowe Price Dividend Growth, but are also considered must-own assets when their prices dip below fair value. These aren't stocks chasing the highest yields. Instead, They represent high-quality, financially healthy companies poised to increase their dividends consistently over time. The first standout is Microsoft, a powerhouse in cloud computing offering a wide range of platform and infrastructure solutions at scale. Its economic moat is solidified by high switching costs, network effects, and cost advantages, with management adept at capital allocation and expected dividend growth aligning with earnings. Morningstar values Microsoft at $600 per share. Next on the list is Broadcom, a compelling blend of semiconductor and software expertise. Broadcom's moat is built on intangible assets in chip design and the switching costs associated with its software products. With a commitment to dividend growth, earmarking 50% of prior year free cash flow for payouts, Broadcom is a strong contender. Morningstar believes its stock is worth $325 per share. Apple also earns a spot, dominating the consumer electronics industry through its integrated ecosystem of hardware, software, and services. Its economic moat is driven by customer switching costs, intangible assets, and network effects. Apple's immense cash flow is expected to continue returning value to shareholders, with a Morningstar target price of $210 per share. Finally, Visa, the world's largest payment processor, continues to exhibit strong growth prospects. Its position in global electronic payment infrastructure is considered unassailable, with its moat built on a powerful network effect. Visa consistently returns cash to shareholders via dividends, and Morningstar assigns it a target price of $306 per share. That's all the news for today, but we're not done yet. Get ready for a rapid-fire recap of all the top stories and your essential call to action. And that's a wrap on today's Qualcomm Pulse. We covered big tech's massive AI investments driving Broadcom stock, the record-breaking rally in the semiconductor industry, essential legal tips for AI engineers, and the top dividend growth stocks favored by expert fund managers. Don't miss out on future insights. Like this video, subscribe to Qualcomm Pulse for more, smash that notification bell so you never miss an update, and tell us your thoughts in the comments below. Follow us on all social platforms to stay connected.